Welcome to Talk Tickers. Today we're jumping right into the latest earnings call from RadNet.
Yep, the diagnostic imaging giant.
Exactly. We're going to unpack their Q1 performance, look at the financials, and really dig into their strategic moves, get you the key takeaways without all the usual call fluff.
Sounds good. So first quarter 2025, RadNet reported revenue of $471.4 million.
Okay, and how does that compare?
That's actually up 9.2% compared to the same time last year. Pretty solid growth on the top line.
Nice. But what about profitability? Adjusted EBITDA.
Yeah, that's where it's a bit different. Adjusted EBITDA came in at $46.4 million.
Which is?
Which is down. Down 20.6% year over year.
Okay, so revenue's up, profitability's down. That's a divergence. What happened there?
Well, the first couple of months, Jan and Feb were apparently really tough. They pointed to severe weather, big storms in the Northeast and Houston.
Right, I remember them.
And also wildfires out in Southern California. They put some numbers on it, too.
Oh, yeah. What did they estimate the hit was?
They reckon it knocked about $22 million off revenue and around $15 million off the adjusted EBITDA.
Wow, okay. That's pretty significant. So those weren't small disruptions.
No, definitely not. It shows how regional events can still, impact a national player.
So if we kind of mentally adjust for those one-offs, what would the picture look like?
Right. So excluding those impacts, they estimate revenue would have been up 14.3%.
Okay, much stronger.
And adjusted EBITDA up 5% compared to Q1 last year.
That does paint a very different picture. Suggests the underlying business was actually doing pretty well.
Exactly. It seems the core operations held up. And importantly, they said things really picked up steam again in March.
A strong finish to the quarter.
Yeah, and apparently that momentum carried through April and into early May.
Which must be why.
Which is why they actually raised their full year guidance for 2025, both revenue and adjusted EBITDA for the imaging center side.
Interesting. So despite that rough start, they're feeling more optimistic about the year overall.
Seems like it. They're basically signaling that Q1's challenges were temporary, more like an anomaly.
That's a really key point then. Outlook's positive despite the early headwinds. Okay, let's dig deeper then, beyond those headline numbers. What strategic stuff stood out in the call?
Well, a few things caught my eye. First, the continued growth in advanced imaging. That's things like MRI, CT, PET-CT.
Right, the higher tech stuff.
Exactly. It now makes up 26.9% of their total volume.
And that's up from?
Up from 25.7% same time last year. So it shows they're investing in that area and, the industry is moving that way too.
Makes sense. And you mentioned PCT specifically. Was there notable growth there?
Oh, absolutely. Aggregate PCT volumes jumped, get this, 22.9%.
Well, that's huge growth. What's driving that?
It seems to be these newer procedures, especially for prostate and brain imaging. Think cancer staging, Alzheimer's, dementia detection.
So crucial diagnostic stuff.
Right. And interestingly, they noted these types of scans seem less affected by things like bad weather. People still need those tests done.
Yeah. Less elective, I suppose. That's a smart focus area then.
Definitely seems strategic. High clinical need, maybe better reimbursement potential down the line too.
Okay. Now, RadNet's also big on its own tech, right? What about that Tech Live system, the remote technologist thing?
Yeah, Tech Live. They're definitely pushing forward with that. It's meant to help with the shortage of rad techs, which is an issue everywhere.
So how's the rollout going?
They said it's now installed on 255 of their MRI scanners. They have nearly 400 total, so that's significant progress.
In there.
And they're testing it for ultrasound now, too. The idea is, flexibility, maybe covering multiple scanners remotely, efficiency gains.
Potentially lowering costs and maybe even boosting revenue if they can run the scanners more.
That's the plan. Of course, scaling it up across the whole network. That's always the challenge, right? Any potential hurdles or integration issues?
Always. Good point. Okay, shifting gears slightly, but still on tech. Their AI for breast cancer screening, EBCD. How's that doing?
That's another big growth story for them. EBCD adoption was up 33%.
33%, quarter over quarter or year over year.
Let me check. Comparing Q1 2025 to Q1 2024. So nearly 3 million screenings last year to over 4 million this year.
Okay, that's significant uptake.
Yeah, and they said the national adoption rate is now over 40%. They're seeing benefits like earlier cancer detection, plus it helps their radiologists be more productive.
And are they keeping this tech just for themselves? Or,
That's the other interesting bit. No, they're starting to offer it to others. They onboarded their first third-party customer in Q1,
really?
an OBGYN group down in Florida, OBG Guiding Specialists of the Palm Beaches.
Huh. And how's it going there?
Apparently, really well. Over half of that group's patients are using EBCD with their mammograms.
Wow.
It's kind of a new model for them, taking it right to the point of care.
Definitely opens up a new growth channel. And speaking of AI and growth, they made a big move after the quarter ended, right? The iCAD acquisition.
Yes, huge news. Acquiring iCAD, which is a global name in AI for breast health.
Big strategic step.
Absolutely. It massively expands their AI capabilities and gives them a global reach they didn't really have before in that specific area.
When does that deal close?
They're expecting Q2 or maybe early Q3 this year. It brings iCAD's large installed base, their sales team. They handle something like 8 million mammograms a year globally.
Wow. That's a major integration task ahead, though.
Yeah.
Merging those AI platforms.
For sure. That'll be something to watch how smoothly they integrate iCAD with their existing AI work, like EBCD.
Definitely. Okay, another area they focus on is joint ventures with hospitals. Any updates there?
Still growing. They now have 154 centers operating within JVs.
154.
Yeah, they added 2 new facilities just in Q1, part of their big JV in New Jersey with RWJ Barnabas Health. And they signaled more JV activity is coming this year.
It seems like a popular model. Hospitals wanting outpatient partners.
Exactly. Cost-effective, convenient for patients. RadNet seems well positioned to capture that trend.
Okay, let's quickly touch on the balance sheet. How are they looking financially? Cash, debt?
Pretty solid, actually. Ended Q1 with $717 million in cash.
Good cushion.
Yeah. And their net debt to adjusted EBITDA ratio is just a bit over 1, so not overly leveraged. They also mentioned they have an active M&A pipeline looking for deals in both imaging and digital health.
So potentially more acquisitions coming.
Sounds like it. They seem ready to make moves.
And how did that digital health segment perform on its own in Q1?
It did well. Revenue hit $19.2 million, up over 31%.
Nice growth. EBITDA.
Adjusted EBITDA was $3.7 million, up about 5.4%. The growth there was really driven by that AI revenue from EBCD, up 33%, and also their radiology software business, which grew about 30%.
So digital health is definitely pulling its weight. Okay, we mentioned they raised guidance for the year. Any other outlook points? Maybe Medicare rates? That's always a big question.
Yeah, on Medicare, no firm updates yet for 2026. CMS usually puts out preliminary rates around June or July, so we'll have to wait.
But what's RadNet's general feeling?
They seem to expect things to be stable, maybe even slightly positive in the next few years, especially once some previous primary care payment changes finish phasing in this year.
Stability would be good.
Yeah.
What about labor? You mentioned the tech shortage earlier.
Yeah.
Any improvement?
They sounded cautiously optimistic, seeing some improvement in finding technologists.
Oh, really? What?
They mentioned things like educational programs helping, and maybe the appeal of working with their newer tech, like Tech Live, is attracting people.
Interesting. But they still have that cost pressure budgeted, right?
Oh, yeah. That estimated $45 million labor cost headwind for 2025 is still baked into their plans. But maybe, just maybe, Tech Live and better hiring could soften that blow later this year or into 2026.
We'll see. It's a tough market out there for healthcare staffing.
No kidding.
Okay, one more operational thing. The Deep Health Operating System, that big integrated platform they're building. How's that progressing?
It's in pilot stages right now. They're testing pieces of it in their call centers, scheduling, billing, that kind of thing.
So not fully rolled out yet.
No, it's a massive project, getting it into all 400 centers. They expect most of the tools will be deployed by year end.
But the real financial benefit?
Probably more of a 2026 story, is what they indicated. Takes time for those efficiencies to really show up on the bottom line.
Got it. Okay, a couple of other quick points from the call. Anything on capitation trends? Is that still a big part of their business?
Less so, actually. They mentioned it's a decreasing portion of their revenue. They're shifting more towards fee-for-service, especially outside their traditional Southern California base.
Why the shift?
Seems like they feel they can get better reimbursement rates that way, which helps fund all these investments in tech and new centers.
Makes sense. And what about the pricing for those new PT tracers, the ones for Alzheimer's and prostate? Are they making good margins on those yet?
Not really, according to the call. Reimbursement for those newer, expensive tracers is mostly just pass-through right now. Limited profit for RadNet itself.
So the value is more in driving volume for now.
Seems like it. They expect the tracer prices will come down over time as more people use them and competition increases. But yeah, those Prostate and Alzheimer's scans are already about 19% of their PET-CT business, and a key reason for that big 20+% growth figure we talked about.
Okay, fascinating dynamics there, right? So that covers the core details. Now let's move to our favorite segment. This is not financial advice.
The wild yet plausible trade idea.
Exactly. Based on everything we've just unpacked about RadNet, the AI push, the JVs, the recovery, what trade idea springs to mind?
Okay, here's one. How about going long RadNet and pairing it with a short position against, say, a more traditional, maybe hospital-based imaging provider, one that hasn't really leaned into outpatient centers or AI as aggressively?
Interesting. What's the thinking there?
Well, RadNet's strategy seems geared towards capturing share from hospitals. They've got cost-effective outpatient centers. They're going hard on AI with EBCD and now ICAD.
Making diagnostics potentially faster, maybe more accurate.
Right, and potentially cheaper than a hospital setting. Plus, their JVs give them inroads. Meanwhile, a hospital-focused provider might be stuck with higher costs, maybe facing the same staffing crunches, but without solutions like TechLive yet, and potentially losing volume on routine scans to places like RadNet.
So RadNet gained share. The other guys face margin pressure.
That's the thesis. RadNet's tech focus and outpatient model give them an edge, especially as healthcare looks for value. The hospital-centric players might struggle to keep pace on cost and convenience.
It's definitely plausible, given the trends, but as always.
Absolutely not financial advice, just a thought experiment. Do your own research, dig into the specific companies. This is purely hypothetical.
Couldn't have said it better myself. Okay, that wraps up our deep dive into RadNet's Q1 2025 earnings. We hit the financials, the weather impacts, the recovery, and those key strategies around AI, TechLive, and partnerships.
Hopefully that gives you a clearer picture of where they stand and where they might be headed.
Yeah, definitely a lot going on there. So what are your big takeaways? What do you think about that heavy AI investment and the JV strategy? Let us know your thoughts.
We'd love to hear them.
This has been Talk Tickers. Thanks for tuning in.